Each morning, real setups are broken down with entry strategies and technical reasoning behind every trade. This is today's best trade setups with Verified Investing.
Welcome to today's best trade setups. My name is Benjamin Poole, head trader here at Verified Investing. The stock market is just wild. Yesterday, we had a news that some of the dividend-paying stocks for defense names needed to be reducing their pay for employees, or not employees, but their the main people in charge, the CEOs. And then all of a sudden, Trump came out and said, hey, we're going to go ahead and increase our spending by 1.5 trillion or $1.5 trillion. And so now some of these defense names are skyrocketing. We have AV, and General Dynamics that are heading higher. The interesting thing is General Dynamics is still having supply issues. So it is extended, it is all-time highs. It's pushing up. I do have a key resistance level for you. And then I did have a couple comments on my last couple videos on SRPT as well as CRWD. So we're going to go in those charts as well. First thing we want to do is I have my staples. I like Oracle right now and AVGO. So let's just go ahead and jump into the Oracle chart. Here's the first chart that we're going to go over. Oracle. I still like this short level. We haven't broken above this downsloping trend line with confirmation. We are putting in this nice bull flag. Basically, what we're looking at is a move to the upside with sideways consolidation right underneath all of this resistance. And that's currently what's happening with Oracle. I'm anticipating a push up to $10 and $210.57. I'm still eyeing this as a short level today. And then for those of you who are interested in swing long, $180.04. On the upside, if it does bust through $210.57, my next shortable level is $223.14. Same as it's always been with this price consolidation. I do still like these levels because it hasn't gotten close to this 210.57. And it stayed away from this 180.04. AVGO is another stock that I've been monitoring for some time. As you can see, this wide range red bar candle has been pretty solid resistance. The longer it stays inside of this red bar candle off of this move to the upside, the more potential it has to bust through this $361.78 level and likely head up to about $370. Your next level of resistance, if it does get inside of that, is $379.96. So basically you're looking for a pierce of 380 if it does bust through 361.78. Now, General Dynamics, like I had mentioned, it is at all-time highs and it's having some supply issues. But let's go ahead and jump into the charts of General Dynamics anyways to show you where the resistance level is for me. Here's this upsloping trend line on GD. This goes back to the pivot high of April 2024, secondary hit right here from May 2024. Here was the third hit right here from the 24th of October 2025. What I'm noticing, there's not a lot of volatility in this. From this peak right here off this third hit, you got about an 8% move to the downside. However, this is still a strong upsloping trend line that is into a lot of resistance. So if it pierces $370 today, this is where I'm likely to pick up this trade for an entry. It was up a little bit higher in the pre-market, about $365. However, $370.26 is where I'm looking to take a short on General Dynamics. This is the fourth hit of this upsloping trend line. This is not a swing trade. This is just a day trade. And I would be looking to stop out at $370.26 if it closes above that on a 15-minute closing basis. Yesterday, I gave you a stock on Mobileye, MBLY. I was mentioning that it had gotten to a specific level in the pre-market and had a decent pullback. So as soon as the market opens, you're likely to get a rejection. I did not see this kind of rejection coming. This got a huge move to the downside and actually basically gave away all of its gains in the pre-market. And let's look at that chart of Mobileye. So I was mentioning $14.21 into a ton of resistance. My first shortable level was right here at 1502, anticipating a continuation move to the upside. And then look at what happened. It opened up slightly higher, got to $14.35. And then look at this drop. I would have never anticipated a 15% pullback on Mobileye, but that's what happened. This first key technical level was pretty strong resistance. And it's not, I mean, to be expected with all this price consolidation right here. There were a ton of people who were stuck in this trade as it continued lower. It did break out. However, I had mentioned, just because we're breaking out, this is not a buying opportunity. We want to wait for a break above with confirmation, and then we could possibly play this for a retrace. Now we're actually below this down-sloping trend line, and it's getting rejected again. So what we want to see, if you guys are bulls out there, we want to see price consolidating again right underneath this down-sloping trend line, a breakout, confirmation, play the retraces, see the crime, and then it's likely to hit back up to $14.21. And then this $15.02 level, that's going to be some pretty strong resistance. AV is another stock that I'm going to go over. This is a lighter volume stock. It trades an average of 1 to 2 million shares. And for me, that is a little bit harder to trade in the live day trading room. It is getting into a nice key gap fill. So if it does head up a little bit higher, it can be a good rejection. I wouldn't stay around in this stock because of the lighter volume. If you get momentum in it, like we're seeing, you can have a continuation move to the upside. So 15-minute closing basis, again, would be my stop out level for this stock. AV right here. It traded a little bit higher than $350. This is a whole round number, so you're likely to get a rejection here. For me, I'm waiting for 365.08. 365.08 is a gap in the charts. And look at what happened. So it gapped up on this day on the 4th of November. We got a lot of bulls excited thinking you were going to go up to the upside. And then all of a sudden you had a 38% drop to the downside, 37.5. All these people who were stuck in this trade thinking that this bull run was going to continue, price action then dropped. If you were out of the money about 38% and you got back to your break even, most people are likely to cut. We want to be there with them on this selling pressure if we can get this $365.08. Taking this to the downside, we want to jump on board with them selling and take advantage of this. I would look for about a 2 to 3% pullback, not a swing trade basis. And then if it does close above that on a 15-minute closing basis, I would look for $380.65 as your next major resistance level. See all this price consolidation right in this area, as well as this pivot top. Likely people will sell into that, into this resistance level, and we want to again jump on board with them on that. MU, I'd monitored. I've had to readjust this upsloping trend line. This thing, the thing with upsloping trend lines or any trend lines, you got to respect what the market action is doing. I did have my first upsloping trend line resistance level was about $310. That was just for more of a day trade. And then I moved it up to 330. And then all of a sudden it got above that. And so I've readjusted this trend line. And again, that's what you have to do. It's an art and a science. You got to take what the market gives you. And now it's putting in a topping tail, or it did yesterday. So if it gets up to 350.16 today, this is where I'm likely to enter this as a day trade. And I'm still swing short on this. So I still think this is an overextended chart. But here's this pivot top from the 6th of October, pivot top from the 10th of November. And then here we got above it, got a rejection. If we can recapture this upsloping trend line just momentarily, $350.66 is where you're likely to get a rejection. And this could be the exhaustion move that I mentioned. I did say that yesterday also, if you got back up to this gap fill at $343, this would be a great area to short. And it looks like it was. You got about a $5 to $10 pullback or $5 to $6 pullback. And so that was a great rejection level. So I needed to push up a little bit higher today because we already got a little bit of a pullback. But again, 350.16 is that level. All right, let's go into SRPT. SRPT is a therapeutic stock. These things can be wild movers, not only to the upside, but also to the downside. It is hovering right underneath this solid resistance zone. If it clears this resistance, there is a ton of upside. The bulls will likely jump on board. I wouldn't play this until it confirmed above it, and then I'd play a retrace. So that way I can have a solid entry point and a solid exit price. Here's the chart of SRPT. Here's this resistance level. You got this double top right here at $25.32. But notice this wide range, this pivot top on the green bar candle. It got rejected here. Secondary rejection. Price consolidated, got above it, tried to confirm, finally confirmed it, and then got rejected the following day. It's quite a crazy move on SRPT. Dropped And then now we're consolidating right underneath this resistance level again. On a technical basis, the more something hammers on the underside of the resistance, the weaker that resistance level gets. And so now your next line in the sand is going to be $25.32. Again, if it busts through that, you're likely to come up to $35.22. I would need some sort of a confirmation so that way I could stop out and make sure that there's no earnings or any news that's coming out on SRPT that could really materially affect the price of this stock. Now, the last stock I'm going to go over, and thank you guys so much for commenting. I really appreciate it, is CRWD. So CrowdStrike is in a nice wedge pattern. If it's going to break down to the if it's going to break an upsloping trend line, it is likely to head lower. If it breaks a downsloping trend line in this bull run, then you could have a continued move to the upside. Let's go ahead and jump into the chart of CRWD here real quick. Here's a downsloping trend line that I'm monitoring. So this is a rejection zone right here. So you take the pivot top from $566, secondary and third pivots right here around $525. This was the third hit, $486. You're in an uptrend on CrowdStrike. What I'm seeing is you got these pivot lows right here, and then a higher low, and then still a higher low. If we take out this low right here at $402, this would negate the upward trend, and then you're likely to head down to this upsloping trend line, and that's where you're going to get additional support. So this upsloping trend line would likely save this bullish trend that CrowdStrike is in. Again, if it breaks above this downsloping trend line, you could come back up and retest this gap fill at $545 and could even push up to double top right here at $566. On the downside, I would look to possibly pick this up around $410 if we can get another rejection down to this trend line. What I like about this is it gives you a solid entry point, and then on a daily closing basis with confirmation below this upsloping trend line, I would stop out, because then you could head all the way down, even head down as low as $300 Pierce. So thanks again for joining me at 8:45 every single morning if you guys are regular followers. And if not, please continue to follow me, because you want to get these market setups as well. And thanks for liking, following, subscribing, and sharing with your friends so that way they can get this market action as well. You guys are awesome. And please continue the comments coming. I really enjoy them, and I really like going over charts specific to what you guys are actually interested in addition to what's moving in the markets. So that's what I have for you guys. You guys have a great rest of your day, and please stay tuned. Gareth Soloway is going to be going live in less than 3 minutes talking about all the euphoria in these defense names. You guys don't want to miss it. You guys have a great rest of your day. Take care.